Welcome back to 10 Minutes Forex. This week has been a roller coaster in the currency markets, with the US dollar taking center stage. From surprising economic data to central bank hints and geopolitical tremors, there's been no shortage of action. Get ready for a deep dive into the week's Forex highlights. The Forex market this week unfolded in two distinct acts. Act 1 featured a strong US dollar, flexing its muscles on the back of positive economic data. But in Act 2, doubts emerged, and the greenback's dominance wavered. As we head into the weekend, the market is poised for the next chapter. The week began with a bang as the ISM Services PMI for November exceeded expectations. This key indicator pointed to continued strength in the U.S. service sector, raising hopes for a soft landing, cooling inflation without a major recession. The DXY, which tracks the U.S. dollar against a basket of major currencies, surged above 105.50 in response. But the market's optimism was short-lived. The JOLTS job openings report for October revealed a decline in job openings, suggesting a potential slowdown in the labor market. This conflicting data cast a shadow over the economic outlook, leaving traders uncertain about the true health of the U.S. economy and the Federal Reserve's next move. The DXY's journey this week mirrored the mixed economic data. The initial surge above 105.50 sent ripples through the Forex market, pushing EUR/USD towards 1.0450 and weighing on other major currencies. However, as doubts about the U.S. economy's resilience emerged, the DXY retreated. Now, as we head into the weekend, the DXY is consolidating around 105.00. The upcoming U.S. inflation report next week will be a crucial catalyst, potentially determining the dollar's next move. The euro has been volatile this week, initially struggling against the strengthening dollar but finding some support from hawkish comments by ECB officials. The pair is currently trading around 1.0550. A break above 1.06 could signal further recovery, while a drop below 1.05 could open the door for a test of 1.04. The upcoming ECB meeting minutes and any further comments from ECB officials will be key to watch. The British pound has shown resilience this week, supported by better-than-expected UK economic data. The pair is currently testing the 1.23 resistance zone. A break above this level could trigger a rally towards 1.2450, but a failure to break through could lead to a pullback. Keep an eye on the RSI indicator, which is showing some bullish divergence. However, Brexit-related uncertainties and political instability in the UK could still weigh on the pound. The yen has been under pressure this week, driven by the widening interest rate differential between the US and Japan. USD/JPY has rallied towards 140, but the momentum is showing signs of exhaustion. A pullback could be on the cards if risk sentiment deteriorates or the Bank of Japan surprises the market with a policy shift. Comments from BOJ officials and developments in the Japanese economy will be important to monitor. The Aussie dollar has been a strong performer this week, buoyed by optimism surrounding China's reopening. AUD/USD has rallied towards 0.68, breaking above key resistance levels. However, watch out for any setbacks in China's reopening or a decline in commodity prices. Also, pay attention to the upcoming Reserve Bank of Australia, RBA, meeting minutes and any speeches by RBA officials. The Kiwi dollar has been relatively quiet this week, consolidating in a narrow range against the US dollar. Traders are awaiting the upcoming Reserve Bank of New Zealand, RBNZ, meeting next week for clues on the future path of interest rates. Keep an eye on global risk sentiment and developments in the New Zealand economy. The Canadian dollar has faced some headwinds this week, weighed down by concerns about a potential slowdown in the Canadian economy and weaker oil prices. USD/CAD has climbed above 1.36. However, any positive surprises in Canadian economic data or a rebound in oil prices could support the loonie. Also, keep an eye on the upcoming Canadian inflation data and any comments from Bank of Canada officials. Geopolitical risks can significantly impact the Forex market. The ongoing war in Ukraine, tensions in the South China Sea, the global energy crisis, and political developments in major economies all contribute to market volatility. These events can trigger sudden shifts in risk sentiment, leading to sharp and unexpected moves in currency pairs. While currencies take center stage in the Forex market, it's important to keep an eye on other asset classes that can influence currency movements and offer trading opportunities. This week, we've seen some interesting developments in both commodities and cryptocurrencies. Gold, the classic safe haven asset, has been shining this week as uncertainties about the global economy and geopolitical tensions persist. Gold prices have climbed above $1,800 per ounce, breaking through key resistance levels. This move has been supported by a weaker US dollar, as a weaker dollar makes gold more affordable for buyers holding other currencies. If uncertainties continue to mount, gold could continue its upward trajectory, potentially testing the $1,850 resistance level. Oil prices, on the other hand, have been on a slippery slope this week, weighed down by concerns about global economic slowdown and the potential impact on oil demand. WTI crude oil has dipped below $70 per barrel, breaking through key support levels. This decline has been exacerbated by a stronger US dollar, as a stronger dollar makes oil more expensive for buyers using other currencies. If global growth concerns continue to escalate, oil prices could face further downward pressure. The cryptocurrency market has been experiencing its usual volatility this week, with Bitcoin, the leading cryptocurrency, fluctuating between $26,000 and $28,000. News of increased regulatory scrutiny and concerns about the stability of some cryptocurrency exchanges have contributed to the volatility. However, long-term believers in the potential of blockchain technology and decentralized finance remain optimistic about the future of cryptocurrencies. Keep an eye on regulatory developments and news from major cryptocurrency companies, as these factors could significantly impact the crypto market. Fundamental analysis is crucial for understanding the underlying drivers of currency movements. By analyzing economic indicators, central bank policies, political developments, and other macroeconomic factors, traders can gain a deeper understanding of the forces shaping the Forex market. Remember, currencies are traded in pairs, so it's essential to analyze the relative strength and weakness of both currencies in a pair. The US dollar had a volatile week, driven by mixed economic data and shifting market sentiment. Major currency pairs showed diverse performance, with EUR, USD, GBP, USD, and USD, JPY reacting to both domestic and global factors. Commodity currencies were influenced by risk sentiment, commodity prices, and developments in their respective economies. Geopolitical risks remain a significant source of uncertainty in the Forex market. Fundamental analysis is essential for understanding the underlying drivers of currency movements. Gold has been shining this week, driven by safe haven demand amid global uncertainties. Oil prices have declined on concerns about global economic slowdown and the potential impact on oil demand. Cryptocurrencies remain volatile, influenced by regulatory developments and news from major cryptocurrency companies. That concludes our comprehensive look at the Forex market today. We've covered a lot of ground, from economic data and central bank policies to technical analysis, geopolitical risks, and the importance of fundamental analysis. Remember, the Forex market is dynamic and ever-changing. To succeed, you need to stay informed, stay agile, and continuously adapt to new information and market conditions. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and hit the notification bell to stay updated on the latest Forex news and analysis. Thanks for watching, and I'll see you in the next video.